Welcome back, everyone. This is Seewing Yee, and my co-host is Justin Zawodny, who is a realtor who works with out-of-state investors, and he's also a property manager in Southwest Florida. So we can do an apple-to-apple comparison. The mainstream media, the bigger pockets of the world, and other real estate gurus that have been promoting their product for years, they always promote, do some burst strategy, buy, you rehab, you refinance, and you repeat, or do this kind of things. Every step of the way is quite risky, especially from out-of-state investors. Yes. So we're comparing new construction, boring, not sexy, long-term markets, growth markets such as Florida. And we can compare apple to apple comparison, buying this like at 30%, 40% discount, find a motivated seller, search the multiple listing service, make ridiculous offer for the next 2 years. Hopefully a seller will succumb to your lowball offer, and then buy the cheapest property in a country, the lowest price, the more dilapidated, the better, and then hire a contractor, inspector, and rehabber to fix the property, make it to turnkey, make it rent ready, and get cash flow. But the front end, yeah, is very sexy. All those fake gurus out there promote this kind of crappy. So what you get when you may get true 30 to 40% discount up front. Yes, you make a little bit of equity, and then you're thinking on paper, buying in those old neighborhood in the Midwest somewhere for this kind of deal to work. They're very low cost, don't get me wrong, but you're buying to C to D class neighborhood, bad tenants, and much older property, 60, 70, 100-year-old property. Even though you rehab it nicely, guess what? In the second, third, fourth year, things will break down. Does not matter how much you rehab it today. And look at the capital expenditure. Look at the tenant vacancy. Look at the repairs and keep and dealing with those low quality tenants. Over the next 10 years, all the paper cash flow that you thought you could get based on your current calculation of pro forma on paper, thinking you can make money, especially in this low class neighborhood in the Midwest, for example. Look, there's some good deals in Midwest. Don't get me wrong, right? People still continue to do well, but it's been overhyped. It's being so sexy, so exciting to make deals by a whole bunch of doors. Syndication, you partner with someone, you go in together, you buy 20, 30, 50 doors. What does that mean by you? I'm 20-year-old, I have no credit, no job, just graduated from high school. 1 year later, I have 75 doors. What the heck that's supposed to mean? Anyway, so over time, this kind of market, not only you lose money on the rehab cost, the repair cost, but appreciation is minimal at best. However, if you buy in a high quality neighborhood, brand new construction, yes, it's not sexy. You're not buying at a huge discount. You can still get a discount, but not very huge. But over time, I've done my comparison. I've been doing this for 20 years, Justin. So if you buy new construction in a growth market such as Florida, Texas, and a few other areas, the cash flow upfront may not be all that great, but you factor in long-term growth, 3 to 5% or more consistent appreciation. You do the math, 10-year comparison, you buy new construction, high quality tenants, low cost of maintenance if it's brand new. In a growth market, you could increase your rent, appreciation going to increase, your tenant going to pay down your loan, you capture the equity, you have amazing amount of tax benefit. We can't even talk about it right now. But the tenant going to pay, the tenant going to stay on an average of 2 to 3 years. High quality tenants. That 10-year apple to apple comparison. So you have to, as an investor, it really doesn't matter where you live. You have to determine your buy box, quote unquote buy box. There are 1,000 ways to invest in real estate. Some people think, you want to buy passive. Yeah, I should do. I have no time to spend time to buy those rehab properties. I'm too busy with my own job. I want to buy a 99% or 100% passive investment. I want to get into stocks and mutual funds. Yeah, that's very passive. I want to buy money market or CDs. Very passive. I'm going to buy a REITs, real estate investment trust. Yeah, very passive. Mutual funds invest in real estate. I want to do a syndication. I want to do other all this kind of work because I have no time. By using our methodology, using what you and I promote, by new construction, single family home in a growth market with a property management, doing everything for you. Really, I want you to go over some track record, some actual case study of investors that within my network and other network you work with in the past 4 or 5 years. Some of your investors purchased 5, 6, 7 of this high quality new construction single family home in Cape Coral, Southwest Florida, single family home, duplex, even fourplex, five, 5, 6, 7 of this brand new investment property for the past 4 or 5 years, out of state, remote, long distance, turnkey. Just answer me this question, then you take over the presentation after I'm been talking too long. So average investor that purchased your brand new properties in the past 5 years, their portfolio, how much time those investors spent per month in managing their 5, 6, 7 property portfolio in Florida through your management?
It's probably 15 minutes a month. In reality, our investors, they're going to log on to their bank's website. They're going to submit their mortgage payment, might send me an email checking in if a tenant was a couple days late on rent. Maybe we have something maintenance wise. It requires one email. Hey, this is what's going on. We quoted it out with our vendors. Here's the cost. Can we move forward? But yeah, no, I think 15 minutes is pretty generous, averaged. There might be a month of vacancy where there's a 10-minute phone call where we're going to discuss the application we have. And that month might be a little higher. But when someone's living there, it really takes very little time, hardly any.
So 99% passive, buying this new construction cash flow properties at 25% down payment, builder incentive. Whether our investors have owned 5, 6, or 7 of these properties, they bought under their own name. They're not doing any kind of partnership, no JV partners, nothing under their individual name, which I like, which you like. What I hear you saying is the total time for a typical month is like less than 1 hour of effort from our so-called 99% passive investors. Is that what I hear what you just said?
Yeah, absolutely. It's certainly, we're going to look into it further, but there's really 3 levels of real estate investing. And there's a reason we're recommending what we recommend. But yeah, getting into it, what are our 3 kind of levels of investing, right? We have our completely passive, our REITs, real estate related stocks, etc. You're going to buy it and that's it. You're not going to spend any time doing anything. But there's some negatives with that. You have no control over anything. You have very likely incredibly high fees that you have no say over. I guarantee that there is a management company managing that REIT, making a small fortune managing it. And then you really get no, outside of the distribution, whatever they're paying, you never get the opportunity to get the equity. There is no cash out refi with a REIT. It's locked up until you eventually sell it. That's it. You buy it, you sell it, and they might pay you some monthly dividends. That's it. So yes, very passive, but very minimal control. Other end of the spectrum, we have our active real estate investing. The Airbnbs, the seasonal vacation rentals. Can you make money? Sure. Are you taking on a second job? Absolutely. And if you're not ready to take on a second job, you're just paying someone else to take on that job for you. At which point, are you really making the money? Well, no, whoever's doing it is, right? Could we find a hurricane damaged home that needs to be completely gutted with a new roof and full new interior, and we're going to buy it for 30% of what the after repair value is going to be? Sure, we can find it. But now, we got to hire a general contractor. We got to hire a variety of subcontractors. Probably going to want me to go out, check on the project every week or so, and that's going to cost money. And all of a sudden, you're watching your profits get eaten up by everybody else. Or we look at our Airbnb examples. Can we charge more for rent? Absolutely. But now we're paying for all the utilities, all the damage, full furnishings, regular cleanings, and all that extra work just eats up that extra rent. And you're spending, think about it. If I say right now, our investors pay their mortgage and maybe one maintenance related charge every handful of months, think about when you're going in to follow out the billing of the electric bill, the pool bill, the water bill, the cable bill, the cleaning bill, the maintenance bill. You're going to get lost in a sea of payments, let alone then you got to pay someone to actually do all of that. You're taking on a job. So will you make more? Yes, but I hope you have the hours in your week to take on another job. And that's where we fall right in the middle, where it's not completely passive. We do need 15 to 30 minutes a month, but you get the benefits of owning the home, right? When it goes up in value, you can do a cash out refi. You can choose to sell it and take your profits. You do get the benefit of having a mortgage in your name and the tax benefits that a tax professional could discuss. You get all of that. And you're also almost 10 out of 12 months of the year, you're going to pay your mortgage online. You're going to check in on Hemlane, our management software, to make sure all the payments cleared, that there's no outstanding payments from you. And that's about it. It's awfully close to passive. And that's right where we want our investors to be.
Let me understand what you just said. Okay, let me put it in my understanding. What you just said is basically Airbnb, short-term rental, and even mid-term rentals, more than 30 days, less than a year. Those business model are overhyped, very sexy, very exciting. It's been promoted everywhere, all the YouTube channels, Facebook, whatever. But at the end of the day, you and I agree, buying long-term tenant, long-term rental, especially when you calculate the 5 to 10 year overall return, long-term tenants, almost 99% passive. And you get a tenant potentially say 2 or 3 years at a time, by new construction, very low cost, very low maintenance, very low capital expenditure, if any at all. Over time, buying boring, buying long-term rental, I believe, based on my track record of helping investors for several decades, will make more money over the 5 to 10 year record than short-term rental and medium-term rental. Look, there are always exceptions, right? There's always somebody going to contest us on this. Yes. But majority of the time, this how we
Absolutely. Think about it. With the short term, the Airbnb, even midterm, you're running a hotel, right? So you're running a one-room hotel, which means now you're responsible for landscaping, water, electric, cable and internet, furnishings, making sure everything looks great, maintaining the AC, possibly a pool. All that needs to be cared for and kept by you. Also, highly unlikely that you're running background checks or credit reports on these tenants to see what the likelihood of potential damage to your home could be, which means, without a doubt, the percentage chance something gets broken, damaged, etc., is much higher with those options than with taking the long-term approach, where we're going to get the credit and background check, call past landlords, find out what kind of shape they left their last rental in, and therefore protect your investment. And if you want to run a hotel, the option is there, but it's a job. It's a full-time job with higher risk.
Justin, I'll say this. Let's see how many people could walk through your house. Short-term rental, you rent it for like how many people? Let's say 10, 15 people in the course of a month. In the course of a year, several hundred different people could walk in your door. God knows what they're going to do to your house, and then mid-term rental, same thing. Yeah, you rent it for 2 or 3 months at a time per year. So you have 4 or 5 people, tenants, going through your house. You calculate that over the next 5 to 10 years, what's going to happen. But long-term rental, one tenant, probably 2 or 3 years, ideal situation. Very passive.
Let's think about care. How is a tenant caring for your home? If I know I'm living there, even let's say a midterm rental, I know I'm living here for 4 months. How well am I going to care for it? How clean am I going to keep it? How much do I care about how hard I'm running the AC? As long as it's livable for the next 4 months, I really don't. What happens with a long-term tenant? Someone who wants to live there for 4 years, right? They're a little bit more careful before they get those handprints on the wall. They have to look at that for 6, 7 years before they repaint. How much are they going to worry about making sure that AC is properly maintained and all the filters are changed out? A lot more, because when it breaks in 6 months, they're the ones living there still, right? You're going to get better care of your investment, which is what we want. You want it cared for and properly maintain that long-term value. So that's just one piece of it. The other side, with that passive approach, the BRR method, for example, do you make more money quickly? You can. There's a lot of tax implications with that, but you certainly could. Good. But at the end of the day, it's very labor intensive. There's a lot of work. It's really, you don't get a lot of those good long-term benefits of a long-term rental. It's you're creating a job. We're creating something that is 99% passive for that professional, which is what your investors are. They all have full-time jobs. I don't know if I've ever met one whose full-time job is real estate, right? They all do something else really well, better than I ever could. And that's good. They make their money doing that. But that means they're trusting someone like me to help them buy the real estate, let them own the real estate outright, have it be really boring, and build that generational wealth using that real estate. They're not trying to make a quick profit, get charged a bunch of taxes and put in a bunch of work. They're just trying to put their money somewhere where long term it will build them wealth. Not make quick money. Build
Generational wealth. The G word is so important because when you own a new construction homes, you can keep it to the next generation because the homes can be well maintained. But if you buy in any other methodology, short-term rental, mid-term rental, or a BRRR strategy, or you buying in this cheap markets, getting this 30% discount up front, 100-year-old homes in the Midwest. I'm not here to trash Midwest. There's always people who do well in short-term rental, medium-term. You know what I'm saying, right?
Yeah.
But it's buying into this fix and flip, syndications, BRRRR strategy, buying this dilapidated homes, fix it up in this own D-class neighborhood. Over time, these owners of this business model, it's not generational. They're going to sell the property at some point in time because they can't take it in over their head. They're not 10 years later, they own a short-term rental, mid-term rental, or BRO homes in a D-class neighborhood. They can give up because the stress level is brain damage. Because when you buy income property, the way I look at it, you're not trading time for dollar. At some point in time, you want to get the passive income to work for you so you can devote most of your time do traveling like I do. I've been to more than 50 countries in the world already, and I'm going to do more. My focus, my priority is have quality time for my family and for myself. I'm not gonna deal with the labor intensive of managing my property. So that's not people will sell. I track the record. I track people who bought this other type of the properties. They can sell it. They can't take it. They can't. So it's not generational. You can't pass on to the next generation because this property will break down. The stress level is not going to, down the road, these people are not going to sustain this long-term investment methodology as opposed to construction. Go ahead.
Look, as well as my investors, I built my business on being honest and transparent and trying to do everything we can to be best for the investor. I can tell you, if we had a bunch of investors want to come buy Airbnbs here in Southwest Florida, I can make a whole lot more money, right? I'll be very upfront. There's going to be way higher management fees. There's a lot more maintenance. There's a lot more work that we're going to charge for. I know that's not what's best for the investor. It's not what we're here for. If you look at the people who do the best in Airbnbs, I guarantee 90+% of them are directly in real estate themselves and doing that work themselves. They're not having someone do it from across the country.
Yep.
And I get even more so, even if it was local, I guarantee again, 90+% don't have a real full-time job. They are in real estate. That is their job. Or they're retired or they transition to a point where this is their job. That's not what I'm trying to sell. What we're doing is working with your investors to what makes them the most long-term money, just the boring, managed, annual rental, new construction. If we're buying a home to rehab, which you could do for a long-term home, yes, you'll make equity, but what are you going to spend up front in repairs? A new AC system alone could run you $10,000. When it comes to the maintenance of a new construction home, $10,000 is probably going to get you the first 12 years, maybe 8. I don't, it's going to make quite a while. I don't know. We might have one home ever that's crossed that threshold in maintenance. And that was only because a Category 5 hurricane hit and needed a new roof, which we didn't even pay for all of it. Insurance covered the check for most all of it. It's just a very different kind of investing that I would never recommend to someone who's on the other side of the country. To think that you're going to properly understand, know, and trust everything that's happening from an 8-hour plane ride away is insane. It's just not going to happen. There will be fees and lost money to just the fact that you can't see it and know everything that's happening. Whereas that boring annual, we're going to do a FaceTime when you buy it so you can see the exact property. You can do a full photo report of the property, full photo report when the tenant moves in, another one when you move out. All the maintenance is happening through our software where you're seeing up to the minute pictures of what the exact maintenance that's required is. That's how we help minimize that lost expense to you.
Justin, let's pivot a little bit. Okay, you and I have been working for several years now, 5, 6 years. I lost count. A handful of investors purchased in Cape Coral, in your market, Southwest Florida, back in 2019 and 2020. And I've been consulting many of those investors that purchased through you in the past 5 years. You know what's happening to their portfolio? Don't say anything. You could elaborate what I'm about to say. A number of my investors, they actually have grown so much in the past 5 years in Cape Coral. The new construction they bought 2019, 2020, they have increased their house appreciation like 50, 60, 70%. And the rent has increased like 30 to 50% over the past 4 years. You know what some of the exit strategies are? My investors to purchase your portfolio, some of them are cash out refinancing.
Mhm.
They do a tax-free cash out refinancing from the existing home they purchased from you 3, 4, 5 years ago. Guess what? And they buying 3 or 4, leveraging.
Yeah. Yeah.
And some are doing 1031 tax-free exchange to
Yeah.
exchange one property to 3 or 4 or 5 properties somewhere else.
Yeah.
That's the scale your portfolio, leverage your portfolio. That's how you build your wealth.
Yeah. So that's when we talk about how there are more passive options like a REIT or a real estate related stock. You'll never get the flexibility to do something like what you're describing, where the value just went up tremendously. The cash flow has worked very well. And now there's enough funds to sell it, 1031 exchange into multiple properties. That option doesn't exist for anything more passive. And I'll tell you, we have investors from your network. There's one in particular, I won't name, but every time I speak with him, and it was a great buy. I really wish I had bought 4 back when I bought the 1. Like,
Yeah.
yes, but you know what? Don't let history repeat itself. Because when we look at, again, long-term projections nationally in the United States, as long as you're okay with putting your money somewhere and letting it be for 7, 10, 15 years, you're going to make money and build that wealth long-term. That's really just a fact. It's just the way it has always worked historically.
Justin, we only have 5 minutes left. Okay. So let's say this. I don't have a crystal ball. You do not have a crystal ball, right? But we see the trends. We follow the trends. We follow the data. We follow all the economic housing data because this is what we do. We are full-time real estate investors, business owners. You know your market so well. Right now is a great deals. You might want to go over one great deal that will summarize that, the great deal that we have opportunities available. Then in the next 3 to 5 years, buying into a suburban market, deep emerging market, like in LaBelle, for example. What's the expectation for our investors moving
Yeah.
forward the next 3 to 5 years? Just do the best you can. I know nothing is guaranteed, but
Yeah. We've talked about this a lot. We saw the same 3 examples. We have single family homes in Cape Coral. Right now, they're selling somewhere between $380,000 to $400,000. Builders providing excellent incentives if we use their mortgage company, and they're renting for about $2,300, $2,400 a month. Without a doubt, single family Cape Coral, it requires a considerable down payment to truthfully be profitable right now. We also have multifamily in Cape Coral, duplexes, new or nearly new construction, probably mid 500s, rent right around $4,000 a month. really strong opportunities there to own multiple units under one roof. And then finally, what for the last probably 9 to 12 months has been the strongest number performance option is the single family in LaBelle. Purchase prices are 260 to 300,000, depending on the exact model that's selected. Rent is 22 to 2,400, depending on the model that's selected. 8% rent to value ratio, which is phenomenal for Southwest Florida.
Yep.
Area that we talk about projections and data houses like Zillow are projecting 6-7% appreciation over the next 12 months. Strong numbers. In the time that your investors have been investing in LaBelle, we've watched rents rise from $1,500 to $2,300. I mean, almost over 50% increase. That's phenomenal. If that trend line continues at even half that piece, it's all about length of time in the investment. There's going to be phenomenal growth there. In fact, the very first investor we ever worked together with bought in LaBelle, and the current rent to value ratio on that property is about 1.5, pushing 2% from the purchase price to what rent is right now per month. That's that long-term, boring, let the markets work, don't mess with it. Again, at the end of the day, the performance numbers, I haven't run a true deep dive on it recently, but between the amount of appreciation, the amount of mortgage buy down, and the amount of rent collected, it's phenomenal. And we have a number of other examples like that, but truthfully, that's what we do. And like usual, best thing to do, someone's interested in any of the markets or any other market here near Southwest Florida, contact Mr. Yee or do the consultation, make sure that you're ready to take that step and make that purchase. He's going to get you in touch with me where we'll talk about exact specific properties that are available and start your journey as an investor.
Absolutely, Justin. You're absolutely right. Yeah, that's nothing more I need to say. The long-term growth is Southwest Florida is very promising, contrary to all the misleading social media, mainstream media. They have no clue what they're talking about because it's everything they talk about is all hype, is all clickbait, is all doom and gloom. That's how YouTubers and house crash bros speak their money. So ignore those idiots because they are garbage. Anyway, you work with someone like
And you can write a negative headline on anything. It's all about having the proper, let's fit. I want a negative headline right now about stocks. I'd say the S&P 500 is basically at its all-time high. It has to go down. That's a negative headline. Doesn't mean it's any accuracy to it. It doesn't mean any true expert would ever agree with it. But you can say it, put that negative headline out there. That's you always have to look at the numbers, think critically about why they are the way they are, and then see long term, will it work? And certainly we think it will.
Yep, absolutely, Justin. So as we conclude this video, so the takeaway for me is, there's a lot of exciting things going on with the mortgage rate coming down and Federal Reserve gonna do more rate cuts, maybe one more rate cut before this year is over, 2024. Then in next year, 2025, the Federal Reserve is gonna do 3 or 4 more rate cut. If this trend doesn't excite you, I don't know what will, but the key is find the right market, find the growth market, buy for positive cash flow, 25% down payment, which you have. Okay, a great blueprint. There's a lot of deals out there. You have boots on the ground. You work with the right builders, the right neighborhood. You know where to strike. So investors coming to you, they can be taken care of. You're gonna help them to achieve long-term wealth. Great long-term market. Very
Nice.
Yeah.
A good, reliable builder, good, reliable home for a tenant to move into, boring, long-term, annual, renewable rent, low management fees, low upkeep costs. The goal is to make this as boring as possible. And for someone to look back in 15 or 20 years ago, I made how much money? That's what we want. We aren't looking for this big, exciting boom because the big, exciting booms often become really unfortunate high risks. And that's just not something I would recommend from across the country.
Sounds good, Justin. Thank you so much for your time. So we could continue to do a bi-weekly podcast follow-up. There's so much more to talk about. There's every time we speak, there are more investment opportunities. There's a lot of deals to be made in your market. It's about investors hooking up with the right person, with the right turnkey provider, people who have a great track record. over the long term. A turnkey provider that a lot of satisfied clients, get a lot of references, a lot of testimonials, which is you, Justin. You provide amazing service. You take care of your clients long term. Thank you so much. We'll continue to work together. Justin Zawodny, although I have your contact information to put it down on my YouTube video at the bottom, can you verbally tell people out there what's the best way to contact you? What?
Yeah. Yeah. I mean, first, the best thing to do, contact Mr. Yee, do the initial consultation, and then he'll put us together on an email, get us to touch each other and take it from there. If you have any questions directly for me, I can always be reached by phone almost 24/7 for better or worse at 239-877-4323.
With that said, thank you so much, Justin and Justin Zawodny, our great partner, turnkey provider in Southwest Florida. Thank you so much. If you guys receive any value from this podcast, please subscribe to my YouTube channel and also put your email on my website below so you can become a free network member of our organization. Free. You'll receive free emails on a daily basis into your email inbox. You can learn more about real estate investing opportunities and learn to become a great investor. Thank you so much. This is Seewing Yee. Justin, I'll see you next video next time. Have a nice day, everyone. Bye-bye.